All right, everyone, welcome to Tesla Today. So there's breaking news just a few hours ago. The Tesla China numbers are through the roof, record-breaking again. But there's also great news that happened on Thursday. As many know, there was the Model 3 revision that happened, but there was price cuts on Model S and X. In this show, what we're going to do is we're going to talk about what they're doing and why they're doing it. The Model 3 launch did not happen globally. They mixed announcements up as well. And we're going to also share information about the Giga factory in Mexico, as well as Cybertruck. So we've got Jeff Lutz with us. Jeff is a C-level supply chain and chief quality officer for some Fortune 100 companies. And he has his own consulting firm. So if you need some help, he's a perfect person. Follow him at the Jeff Lutz. Welcome, Jeff. Appreciate you.
Great to be with you.
There's so much news today, but it's really the commentary that matters most. So what I want to cover first is the breaking news that happened today. Tesla China reported the August sales for Tesla, which is up 31% from July, over 80,000 units sold. So this is pretty bit of a shocker, especially if with all the things that we've been hearing about China slowing down their production line with the new Model 3. So the China Passenger Car Association reported that Tesla Giga Shanghai sold 84,159 vehicles in August. This is a 30% growth compared to the previous month in July. And you can see here from between January and August, Tesla sold 624,983 units. In Q1, they reported 422,875. And then the company delivered 466 in the second quarter of this year for a total of 889. Now, one of the things that you were sharing with me, Jeff, was that compared to BYD is also doing very, very well. Here you can see in August, while Tesla did a kind of a just tremendous breakthrough at 84,000, BYD is doing very well, 274,000. So tell me what you're thinking about this.
Yeah, let's break it all down. So the 84,000 and change for Tesla in August, that goes with the 64K and change in July. So they're about at 148K and change. And a lot of the people that guess China production, both domestic and export, have Tesla somewhere between, let's call it 220 and 230K for the quarter. And, with them being already at 148K, I don't, they'd have to have a down month in September from August for them to be inside of the expected range. So I think they're going to be above the expected range for a lot of people. So I think some people are going to have to start taking their estimates up a little bit. And I think they're going to have a big September. I think they've been pre-ramping the new Model 3, and I think there's a lot of demand for that product. And it looks like the estimates on the Model Y in China have extended in terms of if you put an order in, how long it takes to get it. I think it's extended out to 6 to 8 weeks, versus somewhere in the area of 2 to 4 weeks. So there's a lot of signs that say September is going to be a big month for Tesla in China. And then when you look at the other competitors, it looks like China is starting to return in terms of purchasing power and people getting back to buying, expensive goods like cars. If you look at the BYD numbers, if you look at Li Auto, I think Li Auto is up 700% year on year. They're having a big and then they're not EV, but the point is it looks like the China car purchaser is back. Now the 274K BYD, that's not all EV. There's estimates that somewhere in the 130 to 145K range of that are EVs, so they're doing quite well. If you compare that 130 to 145 to Tesla's 84K, they're really doing well in China domestically, and they're going to be doing some more exports. They've also been growing their gross margins, and right now they're really getting that edge on Tesla in terms of having vehicles that are basically below the $30,000 range, and that's where they're getting a lot of their volume so far.
Okay, good. So that's fantastic news for Tesla China. Jeff, I need to get your opinion. What happened? Because on Thursday, they announced the Model 3, revised Model 3. Everybody's extremely excited. That was fantastic news. We'll share a little bit of info around that. But I have to ask you, why did they announce the Tesla, the Model S, Model X price cut at the same time? And then they also, when they announced the Model 3 revision, it's only in Asia and Europe and select countries, not in the US. So the two together, tell me a little bit about what you're thinking. Why did Tesla do this?
Yeah, sometimes when there's news at a company, there's multiple sets of news, some very good, some not so good. Sometimes companies think like you can announce them together, and it would take the edge off of the perceived not good news, which would be the Model S and X price cuts. What the media did with it, and the media has generally negative sentiment towards Tesla. Negative Tesla headlines get more clicks. There's a lot of discussion of this online today, but the media basically led with Tesla's cutting prices, and then, oh, by the way, they've launched a brand new Model 3, which is, by the way, is the most is Tesla's largest selling EV in the history of the company. Model Y hasn't caught up yet. It will soon. Um, so Tesla launched their number one. They took their number one selling EV and they completely revamped it. That should have been the headline news, but the fact that they mixed the price cuts in. By the way, I think in China, Model S and X is like 1% of the volume, and I think globally, the price cuts on Model S and X, it's 4% of Tesla's shipping volume. But I would say it garnered most of the media attention, even more than the Model 3 launch from the media. Now Tesla, the people on Twitter, Tesla influencers, people like us, we did our, we were very excited about the Model 3. We're tweeting about it. We think it's great. But the way the media picked it up is the media mixed those two together. In financially, sometimes mixing news like that of like we're doing all these great things. Oh, we had to take a charge here. We're doing a capital raise here. Sometimes it is good to mix if you've got wildly good financial news. Sometimes it's good to mix in not so good news together, bundle it up, and make sure you rip the band-aid off and get it out to the media. But when I think it comes to product launches, I would question um, putting something out there that is perceived as negative, as basically you've got demand issues for your products, even though we don't know which is the case for that or not on Model S and X. I don't know if I agree with it. It's a little bit of Monday morning quarterbacking here too. It's I have personal opinion. I think all of us have personal opinion. I don't know if I would have mixed those two together, but that's what happened, and the media kind of buried the real news, which was the launch of the Model 3.
Yeah, I agree with you. They should not have done it. But the Model 3 was only launched in China, presumably because Fremont's going to take longer to be able to get that line up, and they felt that we need to get going. Well, what do you think is the issue? I mean, you've done this before. You've had major product launches of pretty big, from Fortune 100 companies in the mobile phone industry. But when you did that, and you were in charge of these launches, you would never, you told me you would never do kind of like just regional. You'd go global, wouldn't you? What was the issue there?
Once you develop a global brand and a global product line, you keep it that way. And then what you try to do is you try to expand distribution on it. You don't normally go in reverse unless your product is going in reverse. Tesla's products aren't going in reverse. That Model 3 is a stunning product. So you don't what I think happened. I don't think Tesla drew it up this way because this Model 3 refresh, this planning's been in the works for probably over a year, and on the portfolio planning for multiple years. But in terms of like active planning of like, okay, how are we designing this vehicle? Where's the supply base? How are we going to get everything lined up? Get all the trains running on time? That was more than a year ago, probably. And you don't draw it up that way. You don't draw it up of like, we're going to do these two regions, we're not going to do this region, because what happens is naturally, we have all the news here that says, hey, there's a new Model 3 coming, but you go to the Tesla store today down the street and it's the current Model 3, and there's no indication from Tesla when the new Model 3 is coming. So then you get that effect called osborning, where you're kind of killing your current product while you because you've announced something better is coming in the future. I'm not saying there's evidence that that's happening, but that's what manufacturers, OEMs get concerned about doing when you have when once you go global and then you break apart the launches and you don't give indication of like when you're, you know, one of the major regions for Model 3s, North America, when is it going to launch? So I think in summary, I don't think Tesla drew it up this way. I think something broke, whether it was how they were going to source, battery material, whether it's do they need a structural chassis for the cost structure to work in North America, because the cost structure to build this in China is going to be way cheaper. Um, and because if you look at and we'll go through the new Model 3 later, but there's a lot of feature upgrades in the product that are consumer facing, which is great. But then that means Tesla, quote unquote, under the hood or under the chassis, they've got to take all the cost out. So it's either neutral or actually net beneficial, unit economics to Tesla. So in summary, I don't think they drew it up this way. I think something broke. It may have been related to supplier readiness. It may have been related to the design readiness of if they're doing a different, structural design a little bit for the U.S. Um, so we'll have to see how this plays out, and we'll have to see, how Tesla announces this going forward. And this may have had something to do with some of the Model S pricing that we've seen happen of late.
Hmm. Okay. But first of all, thank you, Jeff. I appreciate that I get to ask you these questions because I'm asking you questions that no one else is really covering yet around this beyond the news. Yeah, something broke. I mean, obviously, Giga Fremont just wasn't ready. Shanghai was ready. They had to go. They had to move forward. So I'm going to ask you questions about the Model X price cuts as well as FSD. There's some thinking that, oh, this makes sense because they're just trying to lower prices. But you've pointed out that Model S and X are not really that big. They're not big vehicle movers. But so let's share that information and get your feedback on that. So on Thursday, in addition to the Model 3 revised Model 3 announcement, they also announced that Tesla reduced the prices of the S and X. This is a major surprise. So you've got the long range S now at 74,990, the long range X now at 79,990. It was a 19% drop. And now, though, this is big news that they qualifies for the tax credit. So, and then they discontinued the standard range models as well. So, just a lot of changes to the Model S and X. Um, and here's a great summary of a chart that showed you what happened since the start of the year. The Model S was at $104,000. They reduced it, as we know, big price cuts to 94,000. Then they reduced it some more. Then they reduced it some more. Then they raised it. They raised it. Then they reduced it some more. And then a big price cut. And same thing happened with the Model X. In addition to that, they now announced the FSD, which is a real head scratcher for me. They reduced it from 15,000 to 12,000. We're going to get into this debate of what Chamath says and what Gary Black says and what Elon said around this. But I'm curious what you're thinking. What happened here?
Yeah, I was a little bit of a head scratcher. There's a number, if you read Twitter, there's a number of, people that either don't understand it or think they perfectly understand it. Of like, well, Tesla's, they're getting, cars to the masses in greater volumes. And when you really peel this back, that can't be the case with Model S and X. If you understand, the supply chains and how these things have been capacitized, if you look at that trajectory of pricing over the year, normally when you do something like that, you would want to go in and probably double the output of a product or more, at least 50%, if not double the output of a product. Just like, hey, we think this thing's going to really grow now that we're taking the price back down. And it's just not the case. I don't think, if Model S and X are a 15 to 20K runner, I don't see it going to 30. I don't see it going to 40K a quarter. Maybe this adds 5K a quarter. So some of the people that get this wrong, I think, on the pricing side, are like, hey, look, they could have taken all this money. It's $1 billion over the year. They could have put it in advertising. Well, I think where they're missing something is Tesla is going to get increased sales. There's no question about it. They're going to get increased sales from this. The other thing is, I believe the Model S and X are very different from the 3 and Y in terms of supply chain for Tesla. Okay. And I'm going to speak to what I think is happening here. If you look at the pricing and where it's returning to, it's basically settling near where Tesla was pre-COVID with these models. It was 69, famously 69 420, I think, for the long range S, for example. And they're basically settling very close to where they were pre-COVID. Now, if you look at these supply chains and if you look at the inventories, the 15 days of inventory is Tesla's average DOI across 3Y, S, and X, but 3 and Y dominate that 15 days. If you look at the S and X, I would have to think that it's maybe double or triple that. It's much longer. The supply chain is longer. The span, the network of an S and X supply chain are longer. And why am I going through this? Well, those COVID era pricings are ripping off and coming off of 3 and Y much faster than they came off of S and X. So you saw the 3 and Y price breaks. They predominantly stopped on the configurator in April, and Tesla ripped through that inventory, the old inventory with the old pricing, much faster on 3 and Y than they do on S and X. What I think has happened is now that we're at the end of Q2 and we're basically 2/3 of the way through Q3. I think they worked through most of the COVID era pricing and they got it out of S and X. Do I think that they have a bunch of like cost reduction programs running on S and X? Probably not. But they are getting quarter on quarter reductions from suppliers because they're consistently asking them for, 15, 20,000 sets of material. So I think they're getting some quarter on quarter reductions. I don't think the engineering teams are working on S and X cost reductions like they're working on 3 and Y. And they're all focused on, to me, Cybertruck and Model 3, to be honest with you. But but I think it's those things. I think the COVID era pricing came down. I also think that Tesla is there's a thing happening. We're going to talk about FSD in a minute. It looks like there's S and X drivers are more likely to buy the FSD package on their product because it's a lower percent of the full purchase price versus buying a 15 or $12,000 package on a $35,000 Model 3. That's sticker shock. I think on the S and X, I think more people are buying that. So couple that, couple the COVID era pricing coming down, the Q on Q pricing coming down, and the FSD coming down. I think they're trying to sell more packages of FSD, which is basically 100% gross margin. And what we're going to talk about in a minute, what they've done with auto steer and move that in. I think that's the play right now on S and X. Is number one, they can do it because the COVID era pricing's off. Two, they've had some more quarter on quarter reductions. But three, they're going to be bundling more of FSD together with it.
Yeah, I agree with everything you just said, except that it's still a head scratcher for me because the SNX are very small volume. At the same time, you want to increase your FSD take rate, which makes sense. And at the same time, they're going to reduce the prices, but they don't need to because these are premium brands. I think at the end of the day, Tesla's going to reduce prices because they can. And they're just going to do it across the board, even at small
Yep.
volume, even though it's a premium product. And then, like you say, more people will probably buy FSD, but again, it's still small volume. So okay. So let's continue. There's so much more to discuss here. So before we get to the conversation of whether or not the price cuts is volume related and it's a strategy, we'll hear what Elon said and Gary Black and Shamat said. But that's you said this was a big news, and so I want to spend time because you thought this was really big news, which is FSD. If you look at that, they reduced the prices from 15 to 12, but if you look at AutoSteer and City Streets, it no longer says coming soon, and that's something that they've had for 4 years, according to Elon Sawyer pointed out that AutoSteer and City Streets was a coming soon feature, and it's been listed as coming soon for the past 4 years. It's a big deal because in his case, he thinks it's Tesla's getting very confident in FSD capability. Matt Smith said, hey, he noticed that in the US it says no longer coming soon, but in still international ordering sites, it still says it's upcoming. So he says, Matt, that given this information, I think it's fair to assume that most of the US deferred FSD revenue balance will be recognized in Q3. Tell me what you understand about this.
Yeah, and I'm Matt's great, by the way. He's great at financial analysis. and he follows Tesla, and credit Sawyer for breaking that news and kind of putting two and two together. And even Elon responded to, yep, like, hey, FSD is getting more mature. So there are Tesla basically is taking credit for every time there's an FSD sale. They're not taking credit for that full sale in their earnings. They're deferring it to later, to where the actual package as advertised matures, then they can take full credit for it. And this is the big deal. Them moving the auto steer out of coming soon to moving it into the package, to me, leads me to believe that they're going to be taking credit for it starting this quarter. And I believe that, again, they're doing the reduction from 15K to 12K to increase uptake, and then probably for a period of time. Tesla's very, I mean, it's no, like, this isn't breaking news that Tesla is fairly erratic when it comes to pricing these packages, but it also appears it's an optics thing that it's erratic, because we see everything because it's direct to consumer versus through a dealership model. I just want to leave that note out there. But I asked Matt, I said, well, how much, deferred revenue do you think, just like back of the napkin? And just, again, this is back of the napkin. It could be, upwards of 400 million, and then growing, right? As FSD grows, as the uptake in FSD grows, you're going to be adding that. And that's a big item to be adding, into Tesla's, Q3. So I think this is a big win for Tesla Q3 and forward financials, that auto steer is now in the package. And it also leads me to believe that V12 is closer than we think, and maybe something that actually hits by the end of this year.
Okay. Big news. Okay, so let's get back to
Big
this
news.
conversation of whether or not the price cuts, why they're doing this. So here's Chamet, uh, who said that, when looking at the price cuts of the S and X, he said, this is amazing because, the rapidly increasing price affordability times constantly improving hardware and software super maximize market demand. So the combination of, because Tesla can cut prices and they're going to cut prices, but at the same time they can make this product so incredible, it's something that the combination of that today hasn't been ever seen before in any modern market before, which is true. I mean, this is incredible that you can really have both a low affordable product, but also the most incredible product that you could really have charged significant premium for. Some companies improve products quickly, but no one is actually giving you more for less on such a big ticket purchase so frequently. And it's a big move because it's going to just completely destroy the competitors and so forth. At the same time, and I'm not going to go through this, a very long tweet from Gary Black, who's a institutional investor. He totally disagrees. So just the high level points is that he thinks that these price cuts are lowest elasticity. When you take price cuts, they're kind of a long-term impact to the business margins, and they don't actually increase the sales as much as you think that they are. He's very much in favor of advertising. He talks about the fact that, the way to do this is to introduce new models. And so Model 3, Model 2 will have lower segments, and that's how you do it instead of them doing that. That's what Apple does. And he talks about that, with a haphazard reduction of the S and X, it doesn't make sense. They don't see the value proposition for the expensive models, and that's why he thinks that the S and X had to be cut. It's just confusing. And then advertising, he thinks is really a big deal. Anyways, and then he thinks that the FSD package is a mistake to have cut that as well. People, especially since people don't even want it anymore. Okay, so he says that, and this Justin Horn replies back to him: "If you're so good at running businesses, why aren't you 100 billionaire?" Because obviously the institutional investors, they, his position is, hey, I'm a bull. I love Tesla. Elon's the greatest business mind in the world, but I'm going to think for myself, and I don't think they're doing, this right and that right. But it's funny because Elon replied to Justin, which is under Gary Black's tweet, saying, exactly. So clearly, this is something that, Elon's strategy is very much, we're going to cut prices, and then we're not advertising as much. And we think that we're going to just, again, this whole FSD is going to be a margin play in the future. So volume for FSD, margin in the future. My position on this has been that you can't, if Gary Black had his way, he would have been advertising and he would not have done any price cuts. And so what are you advertising? Oh, safer, faster, great car. Absolutely. But you're not, why would people buy the EV if it costs way more than a nice car? You needed to bring the price cuts down so that it's cheaper than the ICE cars, and then advertise the crap out of that, and then go volume, and then be able to get all the subsequent margins in the future. So, anyways, what's your thinking about what you saw with Elon reply to Gary Black and
You know what
Chamit's
it is?
opinion?
I've come to the conclusion that it's the frequency of this news cycle is one of the root causes of the problem. This Tesla story of what they're doing is going to take about another year to play out, I think.
Hmm.
So first off, I do think we're going to start seeing the inklings this quarter and next quarter, most likely next quarter with all the inventory that they had to burn off. I do think we're going to start seeing that Tesla's supply chain is going to start getting ahead of the price reductions, because the price reductions aren't as aggressive as people think. Again, since April, in the configurator, this is how everybody goes and orders a Tesla. They order it through the configurator. Again, there's another thing called inventory vehicles we'll talk about in a minute. But if you're ordering a new Tesla, the Model Y prices haven't changed since April. In fact, they creeped up a little bit in May. And again, except for two versions in China that comprise, I think, 6% of global volume in in the world. So that's the thing. The Tesla has slowed down the rate of these price reductions in the configurator. Now, if you go and look at inventory vehicles, these are new vehicles that Tesla builds. It has them available all over the world, so people can go in and get a car today. Those are seeing some reductions, but Tesla, as we talked, it's 15 days of inventory. They don't keep a significant number of cars in inventory. So then you'd have to divide that out to see what the impact of that is on the quarter. Meanwhile, the Tesla supply chain, we talked a little bit about S and X and all the COVID era stuff coming off later than 3 and Y, because the S and X supply chain is going to be a little bit longer, run a little bit slower in terms of turning inventory. Meanwhile, you have the 3 and Y supply chain that's turning inventory rapidly. Basically, everything they ask for suppliers, they're turning within the quarter. Suppliers are happy. Tesla, it's a flywheel. It keeps turning. Tesla goes to their supplier and said, "Look, I'm increasing my numbers every quarter. I'm keeping your utilization rates up. You got to give me 1.5%, 2%. I need something out of you. You're getting more efficient. I need to see that." Tesla's also spending, I guarantee you, they're spending engineering and supply chain engineering resources on something called event driven cost reductions. Whereas I'm going to take these two parts and I'm going to combine them. I'm going to delete this test in the factory because I do this test upstream. I guarantee you they have a program running on 3 and Y. It's probably one of Elon's top priorities to check in on weekly, which is how are we doing on our event driven and total cost reductions on 3 and Y. Obviously, they've just redesigned the Model 3, and I'm sure they've taken a bunch of their lessons learned for price reductions. They've also added features to that product. But the thing that, why am I saying all this? The thing I think that institutional investors in the street struggle with are two things. One is COGS modeling. And under COGS modeling, one is just understanding this quarter on quarter reduction that Tesla's supply chain has leverage over their supply chain to get. There's no model in the world that's built in greater volume than the Model Y. The Model 3 is going to be up there right behind it as the two highest volume EVs probably in the world. And they don't understand what that can mean in terms of like quarter on quarter COGS reduction. The other thing is they don't understand the speed of those supply chains and their ability to get out of that older material at the older pricing and bring in the new material at the newer pricing. Conventional, if you cover auto, if you cover conventional legacy auto, they don't turn their inventory that fast. Even for take EVs out of the picture, which are double their current ICE inventory, they hold 8 weeks at the dealers, but they probably have another 4 to 6 weeks in their four walls between them and the dealers of inventory of either cars and or piece parts. Okay, it's not zero. So they're when they have to do a price reduction or price change on their line, they're not seeing it for another quarter, quarter and a half, if not 2 quarters. It, I believe, just given how slow their supply chains are. So I don't think conventional industry auto analysts understand Tesla's event-driven COGS reductions, their supply chain-driven um, quarter-on-quarter reductions, and third, the speed of the Tesla supply chain and what it means for rapid COGS reductions. And when you don't understand those things, the easiest thing to model is Model S and X, 20K times, 20, whatever the price reduction is, put it in the spreadsheet. EPS goes down to this. That's what you're seeing. So we're all frustrated. We're like, okay, when is this compression going to end? Um, and I think we don't know the answer to that question. I think we're getting closer to the end of that, to to being at max compression. But I do think Tesla is going to continue to take costs down, and they're going to continue to pass it on to consumers. And then at some point, it's going to cross over in the new models, and the new models are going to do the work for them. So I think that's where we're at in the situation, and that's why you have this struggle online. We see in Twitter of like, why don't you just spend $100 million in advertising and see what happens? And I think what Elon is saying is like, I know what $100 million of spend will do to create a new product, or to drive a cost reduction program, or to bring up a new supplier and take my costs down. He knows that that'll go to the bottom line. He doesn't know what advertising is going to do, and then I think that's where the debate lies. And he's very first principles driven. We can go again. I think people are undereducated on EVs, but I can't say I understand the ROI down to the penny, which is probably what he wants to do on advertising. So it's not a zero sum game. I think they should do some. I think he thinks they should do some, but it's more of a matter of where and when and how.
Hey there, thank you for joining me. If you can, please consider supporting this channel so I can keep it going. It's a lot of work arranging all these amazing interviews. One of the easiest ways is just to click that join button and become a member of the channel. Thank you very much. Let's get brighter. Thank you, Jeff. So basically, what we've covered today was we shared that the news about the price cuts on the S and X, and that they mixed the announcements between the Model 3 and now the revised Model 3, as well as these price cuts. You gave me opinion on that. You also gave the opinion on, why did they have to did not launch Model 3 globally. But then you also have some opinions, and I wanted to hear, like, how do you think about just general execution by Tesla? What's happening with Giga Mexico? Some people think that it's a little bit delayed, and then Cybertruck as well. What's going on with that? Can you give me kind of overall what's your expectations with Tesla's execution of late?
Yeah, I mean, start off by saying that it's clear. I don't think there's anybody that's doing more in EV and AI and energy together than Tesla right now. If you look at the number of projects, I think Elon would probably say like this is the most amount of stuff that they have going on concurrently, and that goes without saying that that's going to bring difficulty and execution challenges. And sometimes when we kind of look at these things and analyze them, we're either analyzing them in isolation or we're not kind of putting them together in context. And I do think that while Tesla has a lot on their plate, and that when they get through this, I think the output is going to be great and amazing. Some of these things happening together, it looks like they could be challenged on execution. And I go back to the Model 3 not being a global launch. That could not have been the plan. Like once you're a global product to not globally launch, I can't imagine that being the plan. Again, I think the impetus behind that is either going to be structural and how it's designed. It needs to be a little bit like lower cost and more automated for North America, and there may be something going on with the particular battery type that they need to use. Maybe it's the M3P that they want to pick up from cattle, or something else, and that's maybe also why they're indicating that the Model 3 rebate in 2024 may not be what it is this year. So I'm just putting those pieces together on Model 3, and then I look at Cybertruck, and so we're seeing vehicles. We're seeing vehicles leave the factory. They're covered. They get on a trailer and they go to a destination. Um, I think in release candidate and production candidate phase, which are the 2 phases we've been in, and now we're in production candidate. Number 1, as the external public to Tesla, we don't know if they're done with production candidate. If you're not done with production candidate, you're not in production, okay? And, that's one question I have in my mind, and I don't we won't know the answer, and maybe we'll get a random, tweet, either out of Tesla or Elon that says, "We're in production." That would be great. But I think these vehicles are going for testing. I think these vehicles, some of them may be staged for marketing and walkthroughs, so like they're available in various major cities if you want to visit and see. Remember, very few people, except you know we're on we're on Twitter, we're Tesla fanatics. We go to the events, we see the car, we've seen the Cybertruck probably a couple of times, but 99.9% of the world has never seen it. So I do think when you're managing a new product launch, a nationwide new product launch like this, you want to get samples of the product out into the major cities so people can see it. So I could see that happening. Um, and then I could also see them struggling with this ramp. I think you have to take Elon at face value when he says this is the most difficult product. It's a very difficult product for them to build. I think you have to take him at face value. And when I look at that casting and I look at, the size of that press and the size of that die and all the things that come with that and dimensional stability as you increase the velocity of that press. And then when I look at, the goals that he's put on the product and some of the features that have come in maybe later, like the rear wheel steering, the fact that he wants it more impervious to liquid ingress, to be able to cross over shallow water challenges. I think there's a number of challenges that would just add to this list of things that need to be solved prior to it getting into full production. So I'm as happy as everybody to see the Cybertrucks in Twitter, to see them on trailers. I'm as happy. I'm as bold up. I have an order. Everybody knows I'm very bold up on Tesla, but I also think you have to take Elon at what he says, that this is a very, very difficult product to build. And the fact that the announcement was slated for Q3, the launch event, and it may not be in Q3 now. We're in the first week of September. We haven't heard when. Um, and you have to take that as like, okay, it's inched out a bit. And he's always said, full production now. I think for the last several months has been 2024. But I would say the Cybertruck's definitely a challenging thing. That's the third thing. And then the second thing, the final thing is Mexico. I think we've had mixed data. There's equipment on site. They've started, looking at in they've started setting up equipment. And then I think there's some recent drone flyovers last week. There's nothing. So we don't know what's going on. We're not supposed to be in that loop of what's going on between Tesla and the government and permitting and readiness, or what's going on. But it's September, and I think everybody believed that we were going to be breaking ground, months ago. So while I don't buy into since they haven't broken ground, then production is this month. I don't buy into that. I think there's tremendous amount of compression that could occur in the construction phase. I think Tesla knows how to build factories faster than the last factory that they built. I think that's Tom Zhu's whole thing. I think he's probably the best in the world, quite frankly, in the auto industry at doing this. But you have to take all these things together in context and say, all right, Tesla's doing a lot at the same time. And is some of the execution being challenged or not? I think as investors and people that follow the company, I just think we need to take it all in context, watch it very closely, and kind of look at everything and just make sure it's like, hey, everything's not perfect, but at the same time the company's doing more than they've ever done before. And we even talked about what they're doing on the energy side and the robot side, um, yet either. So I think they're doing a lot, and I think they're going to be a little bit challenged on execution. Let's see how they come out of it this quarter. Maybe they come out of it great. I'm seeing a lot of trailers of Model 3s coming out of China, and I think Tom Zhu understands how to do that stair step cutover line by line of that. So I'm excited to see that. And then, of course, everybody's excited to see more Cybertrucks, and everybody wants to get this Mexico plant started. So let's carefully watch, Tesla execution here.
Thank you so much, Jeff. There's so much we covered today. Obviously, it's a very complex business. Tesla's kicking out of the park, hitting out of the park in all ways, but of course, it's difficult. And so you pointed out a few areas that they might be slipping on, which is fine. It happens. Jeff, we were just incredibly fortunate to have you. You just were on fire today. So I'm going to have to, if we can, have a separate episode for some breaking news that's happened with Shanghai doing megapack factories. I want to get your opinion on the Model 3, of course. And also, you have some opinions about the Biden administration offering a $15.5 billion, let's call it a grant, let's call it a bailout for the automakers. I need to share that information with the folks here because that was pretty powerful. Let's do that episode. We'll release that for tomorrow. Folks, follow Jeff. He's at the Jeff Lutz. You can, very, very fortunate we're getting his advice. And I really appreciate you joining me on my show regularly. It's just, you were on fire today. Thank you so much, Jeff. Appreciate you.
Thanks, Herbert. Great to be with you.